to bring in Pankaj. Pankaj, you come in at the last, so you get extra time for that as well. And you can, this is one organization which I've seen embracing the technology side so well, the whole process. And I was reading an interview that Vibha had given the other day about her being very optimistic with the recovery that is coming through. So how do you see all of this translating into benefits for your business, Pankaj?
Sandeep, thanks for getting me in here, and thanks for the extra time as well. We in life insurance, I would say, have been relatively lucky given how the entire economy has panned out in Q1 for India Inc. If you look at life insurance industry overall, we were just about -15, -20% in total premiums in Q1. If you look at health insurance, they were actually plus about 16% or so in Q1. So obviously there is something that is playing in the consumer's mind, which is impacting the way they spend their money. So the composition of the wallet is indeed going through a change, and that change might impact different sectors in different ways. And again, in short term versus long term, the manifestation might be different. Having said that, those organizations which have been at the forefront of digital have been getting some benefit even in the current environment. We work with a lot of partners, as well as our own digital journey has been underway for almost 5 years now. We have seen that consumer acceptance of digital is very high. So digital and data are definitely very, very common themes that we can see running all around. And these are the 2 Ds that we all talk about. But I also feel there are many more Ds that are happening right now in the middle of us. And I would want to talk of some of those, how they might impact our respective industries over a period of time might differ. But these are coming our way is my belief. In the spirit of people using acronyms like VUCA and the Rs, I will be using Ds to talk about what I'm seeing is impacting all of us globally. First D that we all have to be very realistic about is that degrowth is a reality for now, depending upon what estimates you look at. GDP for India itself is going to be probably -3 to -4% in next financial year. Some of the markets in Europe, I was seeing the numbers, GDP might be -10, -15, -20% also in the next 12 months. This means that we have to be prepared for a world where growth is going to be slower than what we have been used to in the past. That is also reflected from some of the surveys. For example, if you see the purchasing managers index, that still continues to be below 50%. It went really down in April and May. It has come back in June a little bit, but is still much below 50%. If you look at the consumer confidence data that RBI has published, people are still negative about where they see in the next 12 months. Obviously, the current period is negative, but the next 12 months is also negative. So coupled with the GDP growth and the sentiments coming from the PMI as well as the retail consumer, we are in for a period of either degrowth or low growth. Second big thing that even Manish spoke about, and I'm also seeing it, that of deglobalization. All of our corporate life we have spent where globalization has been a predominant sentiment and movement across economies. However, if you look at how the US-China trade discussions are coming about and other tensions, global trade is reducing. If you look at India's current account deficit, the latest numbers, our import just fell off the cliff. Exports also declined. So overall, there is a negative. If you look at what is happening in some of the Middle Eastern countries about their own visa policies, US visa policies, the way the remittances have dropped from some of the countries, there is a trend of deglobalization. And I was in a webinar a couple of weeks ago, and one thing that came out is that globally we need a policeman to drive globalization. It used to be the UK just around the First World War and that period. In the 30s, there was massive deglobalization because there was no world superpower. 50s, 60s, 70s, US was a superpower. It drove a type of globalization. Today, the rules-based global world order is not there anymore. It is like the biggest superpowers are in conflict with each other. If US can withdraw from WHO, we can all imagine where we are exactly in terms of globalization. So it is going to impact us. How it impacts our respective industries, we will have to see, but it is coming our way. Another big thing, because of digital and the way people have a DIY mentality and direct type of interaction models, is that of disintermediation. I would give a very simple example. In Mumbai, Alfonsos are a highly preferred breed of mangoes in the summers, and typically you get them through middlemen who take their cuts and deliver to the mandis, and you get it from your local vendors. This year, a lot of those producers of Alfonsos directly tied up with the societies, society office bearers. They brought their truck and people went and bought it directly from the truck. And this is just one example of disintermediation. I was talking to my neighbor. He invested 2 crores in some mutual funds with a distributor about 3 years ago. Obviously, he has not seen any returns. He was finding it difficult to engage with him because of the current lockdowns. And his wife just downloaded the app and gave him the statement that he was looking for. So from the convenience with which you can download a statement to making the investment yourself is just one step. So disintermediation is coming our way. If you look at Robinhood investors, which are there in the US, in India also, the type of growth in demat accounts that we have seen, concurrent with the reduction in the SIP inflows, it is again telling me that disintermediation will impact all of us, and we have to be prepared for that type of a world. Even if in the entertainment industry, many of the mega movies have sidestepped launches through multiplexes and directly going to OTT. So disintermediation is another big D that I'm seeing is coming. Third D is that of disinflation. If you look at the type of money flow that has happened in terms of monetary stimulus, US, I believe, is something like $3 to $4 trillion of monetary stimulus. If you look at India also, depending upon how we count it, we might have a different number, but a couple of 100 billion type of an impact we can assume even in India with all the stimulus that has come up. However, the inflation number has barely moved. I was looking at the US data. Wholesale inflation in the US is actually down by something like 0.8%. So it should have been up by about 1.6% as per the usual trends. So delta is about 2.4% in the inflation, coupled with massive amounts of liquidity inflows. Interest rates are at an all-time low. Oil prices, we all know, India's budget is made using a dollar assumption of $65. Right now, expectation is something like average of $35. So $30 per barrel benefit coming our way. And I was reading somewhere that $1 reduction in global oil prices has an impact of $1.5 billion on India. So India in a way gets a free check of $45 billion because of the global oil prices being low, one of the few silver linings. But overall disinflation is coming our way. If you look at the data on US, data on oil, data on how people are negotiating their rentals, the way they are negotiating the fees, even school fees, there is disinflation coming our way. Another D that I'm seeing in the financial services sector that we have to be prepared for some period of time is that of delinquencies. So whether it is EMI payment or it is the payment related to the life insurance policies you may have bought earlier, but you need to pay the renewal premium, or it could be something about whatever risk perception lenders have. Like Manish talked about, that the smallest 3,85,000 of the customers who are less than 5 lakhs have not really got the benefit of further injection of loans. And my feeling is it is reflected by actual delinquency as well as fear of delinquency that we might have about some customers. Again, Shashank was talking about interest rate transmission not having taken place. The transmission has not taken place because while your cost of funds may have gone down, your delta that you need as a risk premium because of actual delinquency or fears of delinquency has gone up. So the transmission on interest rates has not happened because of delinquency, actual or expected. Another big trend that I'm talking about, another big D, is that of downshifting. If I talk about the average ticket sizes, whatever I see in our industry, whatever I read about in mutual funds, and Shashank spoke about smaller cars, FMCG companies talk about 5 rupee biscuit packages, or used cars being spoken about, there is a downshift that is happening in the consumer's wallet share. And downshift, in my opinion, is a reflection of the degrowth as well as the low sentiments and confidence that people have. How it will reflect us in the future, we have to be prepared for it, but downshift of customers' expenses coming. One thing I heard, I am not sure how much it is true. My kids go to a medium category school, international school in Mumbai. There are schools in Mumbai that have fees of 15 or 20 lakhs. It seems that a lot of kids whose parents were paying 15 or 20 lakhs of annual fee, they have moved to my kids' school, which is more like 5, 10 lakhs, 15 lakhs type of a fees for a 2-year course. So there is a delta that has taken place in the consumers, a manifestation of school fees also. Possibly, I'm not sure, but it is something that I heard. Another D I want to talk about is that of customer. I don't want to use the word disloyalty, but when I say consumer disloyalty towards a brand, I mean their willingness to try out a new brand. Whether it is because the availability of different brands has been at a different level because of COVID-related impact, or you want to buy a different stuff, a different item because of need, or because your price expectation of a brand has changed, consumers' willingness to go for a different brand has gone up. It is reflected also in some data I was seeing from Google search trends. But we have to be aware that if we believe that customer is loyal to us because of the brand, it is not going to be true anymore. You have to keep earning that customer loyalty in the new world as well. Another linked theme to what I have spoken about is that of deleveraging. If you see a lot of companies, they have tried to get additional capital in their balance sheet rather than taking more loans and more debt type of instruments. If you talk of consumer also, I believe that because loans have sort of slowed down over a period of time, it will lead to some level of deleveraging. That has an impact on consumption further down the line if deleveraging happens. But my belief is that is one thing that we have to be prepared for. The disinflation is actually because of the demand shock, which has impacted different industries differently. Demand shock, in my opinion, for the COVID negative sectors that Manish spoke about, is probably going to continue for some more time. Another thing that I am going to get into now is that of what is happening in customers' mind. Another D that I see in the customer's mind and in our individual minds is that of disquiet. A lot of us are worried about our health, about our jobs, about not being able to meet with my friends, about teenagers who wanted to socialize, who are, let us say, just imagine teenagers in their early teens, late teens, who are stuck at home, which is their prime years for going out and talking to people. There is a lot of disquiet in the minds of people. It may have an impact of mental health. It already probably has some type of a mental health impact. We have to be aware of the people, our consumers, when they talk to us, our employees and team members, when they talk to us, that yes, there is an element of mental health that might be playing out right now. Some early search trends from Google again indicate that people are searching more about philosophy related stuff, about things like how do I meditate better, etc., etc. It is about consumer disquiet, or the people disquiet in the people's mind. They are not just consumers, they are people, and there is some level of disquiet in the people's mind. Another trend which I feel probably is not reflected fully in India because the data availability in India tends to be poor, but I was reading somewhere that if you look at the New York market, New York property market, the prices in Manhattan apartments have actually gone down, while the prices in the Hamptons, which is like their Lonavala, have gone up. The median prices in the Hamptons in the current crisis have gone up. To me, the D that is reflected is de-urbanization. Is it coming to us in a big way? If we have worked from anywhere coming, as many of us have experienced, work from anywhere has given us decent productivity without any big issues that we were paranoid about earlier. People have the option of staying anywhere. Would it lead to people moving from metros, which have been hubs of innovation for the last couple of centuries in a way? The metro corridors have been those hubs. Is that global model going to change subsequently? And that is something that I feel is possibly coming our way with increased digitization and health fears, and some of the prices, as I talked about, Hamptons versus Manhattan, reflecting that. So the net summary that I want to point out here is that this degrowth is probably continuing, or if not degrowth, slow growth, because consumer confidence is limited. They are voting there with their wallet. We have to acknowledge that to some extent. There is going to be a shift in how people live. and each of our industries may be getting impacted differently. It is all going to pan out over the next 12 to 24 months. We all have to be highly agile in responding to this world.
Sandeep, may I?
Yeah, Shashank.
Sandeep. So I think what Pankaj ji has listed out, I think quite real. All the D's which he has listed out, quite real. But we must also look at the other side. So if we look at all those D's, largely those are very real, I acknowledge, and we need to be realistic about it and to take care. Some of them, however, may not be permanent, and the human sentiment changes very fast. We have seen it in the past when the SARS came in Hong Kong and some parts of the eastern of the east. The consumer behavior also reverted in many cases. Of course, there are some points which are permanent. Then there are some issues which are probably going to be a little more transitory. The thing is that do we continue to, of course, you have to look at them and look at the very realistic thing which Pankaj. So I would like to add the other D, which is do the positive and don't the negatives. And I was I'm happy I'm staying on the first floor because otherwise I would be tempted to jump off if we see all the negatives which are actually quite real. But let's try to look and make something good out of it for everybody in our industry.
So Shashank, actually you made a very, very good point. In fact, I would also like to add, when I said look at the positive of the VUCA, Sandeep, one of the key things is that yes, it's a very tough market. It's unprecedented, right? No one has seen it. But is this the time to actually innovate, to make everything real? Understand, what is happening today. If there's this shift happening that Pankaj is speaking about, am I partnering? Am I collaborating? Am I innovating? Am I bringing in something that will make me the leader in this change that is happening? I think so. I think these 4 months has given us a lot of time to, reboot, like everybody says, but it's the process, right? Eventually, it is the product eventually, and it is the execution. If you bring it down to the basics, I think we just understand it. We are agile enough, like Pankaj said. I think there are positives also.
Yeah,
I think Sandeep, I'd just like to build off that. And one of the things I also see is when any crisis happens, whether it's something that lasts 4 months or a couple of months, I think it basically exaggerates and accentuates trends that were probably already there. So digitization was always a trend. Consumers are always looking for better value. There was a growing trend of people thinking more deeply about issues. Pankaj mentioned about people thinking about meditation, how to deal with their lives. Work from home was a trend. I think many of these are getting accentuated. And I think what we're going to see is this will throw up organizations and people who are really going to play on the front foot and say, look, how do I now almost reinvent the value equation for consumers, offer them what they need, for employees. And we're going to see a sifting between those who win by playing on the front foot and those who hunker down and get, to add a D, get defensive, are going to lose. So I think this is, in a way, they say every crisis is an opportunity. I think this is an opportunity for people as individuals, for leaders, whether we are business leaders or in the sphere of politics or in government, to really play on the front foot, because I think that's how we will progress. This is not a time to be defensive and hunker down. Take stock of those realities. And I really like the optimism that I'm sensing from a lot of the other panelists.